Hey there, Jedi traders. David here of TradingFibs.com to bring you the market outlook and recap for the indices and for crude. Week finishing November 2015. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market. See what's going through my head on any given day or week. Always make sure you have a solid trading plan and always manage your stop when placing a trade. As we head into the holiday week next week, let's go ahead and take a look at price action this week as FOMC minutes came out on Wednesday. Give a little spike in the market, and that's where we went. Gain for the week here on the Russell, opening up at 1143.5. And jumping all the way up to close up here, close out a daily gap. Let's go ahead and close that daily gap. Boy, we took care of one daily gap after another this week, as we have plenty of daily gaps downside. Market action on regular trading hours will eventually come down and close those out, but climb we do, and as we do, we close out each individual gap. 1162.7 is the last open gap from this week's action here on market profile. Price action at a given time, not how many trades took place at a certain volume. We'll look at volume profile here in a couple minutes. Jumping over to the YM, nice gain for the week, 17.054, all the way to finish up here at 17.803. Closing out one gap over another, leaving an open gap from today, 17.704. But check it out, 1, 2, 3, 4, 5, 6 open previous gaps closed out, and 3 of them from previous weeks, and another open gap down here, 17.459. But what a rally after Wednesday's FOMC minutes to finish at the highs. Jumping over to the NQ with a weekly opening price down here at 44.93, making a jump all the way up to 46.89.75. Just missing the gap up here, 47.0250, closing out 1, 2, 3, 4 open gaps this week, and closing out a previous open gap from a previous week. Leaving an open gap down here at 45.70.25, 46.59.75. That's right, we've been doing a nice job at clearing upside business. The only concern here is, yes, there is plenty of room downside to eventually come, but again, might take us a year to get there. Eventually we will. Jumping over here to ES with a weekly opening price at 2016 at the bottom. Almost grabbing that 1,850, but it was all upside for the week here on market profile, closing out 1, 2, 3, 4, 5 open gaps. 207.950. Yesterday's close never almost coming to close that out. Actually closing out this 2093. Let's go ahead and put ourselves a dash there. That's right, we closed out that 2093.75. Anything to the upside? No. It's nice when market action comes upside, clears out old business, however leaves footprints behind. 1874.75, 1943 are my lows. Open gaps again. When do those come and get filled? Let's just leave it at eventually. Crude rollover contract, we're now in the January contract, so weekly opening price on the December contract was 40.76. We closed up here at 41.46. Let's jump over here to the volume profiles price action here on the Russell. We could see that nice open gap was closed up here from last week. Note the 600-day macro point of control, 1144, and that's right, look at that. Almost 2 days. Last Friday and Monday hanging around that price. Tuesday, Wednesday was that jump up. Wednesday, very weak high point, a little bit of repair up there, and value all the way up here to 1178.9, almost closing that out. YM here, we closed out again that previous week, this back from November 11th. Open gap, price action to the downside, closing out other points of control and rallying up here. Volume profile on the NQ, again, nice open gap filled, closed from 11.12 as price action rallied on Wednesday. FOMC minutes up until almost the point of control up here, 46.94. Again, volume profile, a great way to supplement your trading by looking at where's the price strength in any given day. how much volume was at a given price versus how much time was spent at a certain price. Shows you strength in the market. Volume ES, here we go. Volume profile again, back from November 11th, Veterans Day. Price action downside, break action upside. A little bit of a weak base here. Didn't come back down and repair that. This price action migrate up here to 2083.5. That's the 600-day macro point of control. And actually, if you go back several weeks here, we could see price action for several days. High of the day and high of value area high was hanging around this number, 2083.50. So a magnet of sorts. Volume profile, squeezing it up here on the crude as we roll into the January contract. Yep, crude's got plenty of room to move upside. We can actually get all the way up there, 108.64. Who knows? One day we might go close out those points of control. But right now, we got nothing to the downside. That's right, nothing to the downside. So, long-term picture still doesn't look good upside yet. But we can see here we got a lot of consolidation going on here. Taking care of each day's business. Point of controls taken out as we're hovering here in these low 40s again. You got the NACE, you got all the each side of the coin out there saying crude's coming down to 20, and you got crude going up. Everybody has their own opinion, but just following the charts in front of us, we seem to be in some consolidation now. If we had lower, we had lower because of the long-term picture. Let's jump into long-term pictures here on the Russell as we move into next week with, again, Wednesday. A lighter volume maybe after lunchtime. Friday session will probably be, again, closes a little bit early, so don't expect as much volume. Possibly good trading, but hey, man, I'm all about taking a little bit of time off, so you should too. But anyway, as we move into next week, some possible good days of trading as we head in the TF. Count it up. We're looking for bulls versus bears, bullish trend. Up here in the upper left-hand corner, we have the T3 moving average on a 50 tick on the Russell, showing us bullish. And we have the 4-hour chart crossover upside, bullish to neutral. Actually, that I'm going to call for the bullish drive on that as prices action has now moved up. So let's go ahead and erase the neutral. The neutral was prior to the open today. So we got bullish upside, supporting to the move to the upside. Bearish neutral. Looking for this moving average to cross upside, but price action upside. Bigger picture, unfortunately, is still bearish. Bearish on the daily and the weekly and monthly as price action upside, but still downside. So my concern on the Russell is that while the short term is headed upside, bigger picture is still downside. Here we see the wonderful closure of the gap. From last week, we were talking about price action coming up here. Fibonacci retracement, 61.8 was closed out or actually hit and fade from that line. So any true trend change will break above that 61.8 next week, hold above, and that should push at least the dailies and the weekly upside. But for now, big picture is still bearish. Weekly is bullish, but the daily still struggling to get up there. And again, the short term for the intraday has been all bullish. Let's jump into the YM. A little bit of greener picture here. We have bull right here. On the monthly, we're still bearish to neutral as price action is still downside, but got a nice Heikin-Ashi bar candle sticking up there, so I give it a neutral, half a point here. Bullish upside now on the daily. That was a nice, that was a turnaround right there today. And so bullish. I think you can see that the YM is all in the green. Again, filling out, that's right. Even that open gap from back there closed on the end of last week and then popping right back upside to close that gap as well. Unfortunately, today we left another open gap, so eventually that will have to be taken care of. So we can go ahead and erase both of these open gaps as they have been closed. Unfortunately, we still have, that's right, we still have our open gap all the way to the downside. Let's go ahead, excuse me, and show you that right down back in. That's right, there it is, sitting right back at the beginning of October, which has not been filled. And of course, all you have to do is go back to last October, and we had a gap there that wasn't filled till August. So again, it could take up to 10 months to close those out. Going to long-term NQ, price action here as the green on the YM is followed through on the NQ, bullish up here, bullish on the 4-hour chart on 51.44. So bias, technical bias sitting to the bulls. It doesn't mean you can't trade in either direction. It doesn't mean you don't have a pullback. It just means that the bigger picture right now is sitting upside, bullish. For the most part, monthly is giving a little change here, bullish to neutral. So there's almost a 96%, 98% to the bull side. Again, we could have a possible pullback next week. That will show up here in the upper left-hand corner on my 75 tick chart, my 4-hour charts, and anything intraday will then show all to the red and signify a good pullback. So regardless of the intraday right now, the big picture is all in the green as we continue to head upside. How high we go, I can't give you that information. All I can tell you is by technical bias on my charts right now, strong, very strong to the upside. ES, same picture, bullish, bearish to neutral here as price action tucked under here today slightly and now coming back upside. Bullish on the 4-hour chart, 51.44. We here have on the monthly, still downside, but green Heikin-Ashi candle coming back upwards as we can see here. Support at a former Fibonacci line, bullish to the upside, bullish to the upside, bullish and bullish on the daily. Here on a Fibonacci, we see we closed out the former gap here as we saw in the market and volume profile. Unfortunately, we left another open gap today as well, and like the NQ and the YM, we have an open gap all the way down below, especially all the way down to that 1943 number. And to wrap it out, we have the crude here. Crude sitting almost completely in the bearish territory. I don't see one bullish on my chart except right here on a 100-tick chart as we saw price action push up today and then close out downside as we contract rollover. But again, the big picture has been bearish all around. T3 moving averages on a 4-hour chart, 51.44 on a 4-hour chart. Bigger picture monthly has been downside. We've been monthly down for most of 2015. Bullish here on the monthly. I'm sorry, the weekly here is price action coming back downside. Bearish over here on our volatility with the Kiwi trailing stop, and then also here on the daily reject here at the 50-period moving average. And so for the last couple of weeks, we just continued to downside. No real strong Fibonacci retracement on the chart, so I went ahead and drew a Fibonacci extension. We continue to just take out each Fib retracement, but I want you to take notice here is that we're holding right up on 100% of this move down in a retrace. We've come down to 100% of the move, and we seem to be holding up here on the daily. So give that 1, 2, 3, 4, 5, 6 days. 6 days holding up right here at the Fibonacci target. If price action continues downside, look for 39.31. Look then down to 36.46, and a full move will be down to 28.25. And if Goldman Sachs has their way, I guess that would settle around somewhere around the $20 if that barrel gets down there. So again, big picture for most of the market has still all been downside, been upside. TF having a struggle here that we just talked about again. Key Fibonacci retracement. Not all the long-term charts are to the upside, so I'd kind of watch the Russell. Had a great day on the Russell yesterday with some solid moves, and so who knows if we can carry that into next week. And then the crude has been all to the downside as we roll over into January contract. Trend move of the day goes to the crude here that we could see on a variety of trading room members with their charts. Awesome way, whatever chart you're using here on the crude, using the Ninja Trader on the Renko charts, and then on the crude charts. On the crude charts here, we could see. There we go. Crude charts today. So trend move of the week in. Looking for the trade. When we say we could trade in both directions, absolutely true. The big picture on crude we know has been to the downside, but when you have a nice move to the upside like here, where T3 moving averages cross over, you got the 534 crossing at the same time, you got the 20-tick range chart, big market internal, and the 50 above the 144 makes for a wonderful move to the upside. A little bit of chop at the highs, and then right back downside with a nice entry together. Golden standard entry right here. Just line it up. Got the sell signal right there. Heikin-Ashi bars downside, a little bit of pullback, re-entry possibility if you were taken out, come through VWAP and all the way down to close it out, lining all three charts. So again, bigger pictures to the bears. So this move downside, more in alignment with the bigger picture of monthly and both the a little bit higher time frame 50 tick, 100 tick charts. But again, why miss out on a move like that? So there's our trend trade of the week. And as we just saw again on this chart, each variety of different charts used by our traders showing very similar action, each to their own charts, but the same strategy. That concludes today's insight and outlook for the state of the indices for next week. Feel free to stop by at tradingfibs.com or in my social media outlets to obtain more information. Hey Jedi Traders, I've started a new blog here, weekly results. I go ahead and post each day daily trading stats. I'm going to go ahead and do a little bit of different format next week, just post them individually each day, but really just looking at each week behind one day at a time. Here we have Monday on the NQ. You could see the stats here, and then as I scroll down, check it out, you could see the trades, what I was looking for, and the lesson that I got from the trade. Again, some wonderful trades. Tuesday, I was on the NQ. Again, you could scroll down. Wednesday with my stats here, I was on the Russell on Wednesday and for Thursday, and finishing out the week, scrolling down here, plenty of information. Read Friday, trading on the YM. We'll be looking at the ES next week. Coming over here to the econ calendar for next week as we head in, we got GDP on Tuesday. Again, Wednesday, jobless claims. Thursday, markets will be closed. Got petroleum. So a good couple days, good probably market action the first couple days of the week. It again gets slower towards the afternoon on Wednesday. Thursday, markets close. And then Friday, a lighter session. But I say go ahead and just take the time off. So make sure if you have any questions about the trading room, e-manual, trading rules, etc., you can find all that information here on my website at tradingfibs.com. My trading mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at tradingfibs, and as always, I leave the crystal ball to the experts. I really only trade what's in front of me on my charts. Have yourselves a Blue Zone day, a Blue Zone weekend. Good day, good night, and great trading to you next week.